Hello ladies and gentlemen, and a very warm welcome to today's webinar, which is brought to you by Shared Services Inc. and sponsored by BankTech. Today we're looking at 5 keys to achieving cash flow control. So my name is Susie West, I'm the founder and CEO at Shared Services Link, and I'm your host for today, and my guest speakers are Ian Painter, who is Head of EMEA Marketing at BankTech, and Rob Liddell, who's Head of Solutions at BankTech. So great to have these gentlemen with me today. You, of course, as ever, you have a very important role to play, which is to make sure that you get your questions answered, please. So just submit those through to me nice and early. The earlier I get them, the more chance it is that they will be asked, and I will put your questions to our experts in the last 10 minutes of this webinar. So let's have a look at what the agenda looks like for the next 60 minutes. I'll be touching on a little bit of context for this session. I'll then be handing over to our key experts, and then we'll be taking your questions towards the end. So let's have a look at the background to this session. Many shared services organisations and high volume organisations in terms of invoices and those companies that receive high volumes of transactions, they've obviously been very fascinated by e-invoicing for the past 10 or so years. And a lot of organisations that have adopted e-invoicing have mainly put their focus on high volume suppliers and large multinationals who are their suppliers. And it's been quite interesting that the low volume suppliers or even the SME market have maybe not been catered for quite so kind of cohesively by the e-invoicing solutions out there. It's not an afterthought, but it's the real kind of target for a lot of e-invoicing providers is very much the larger suppliers and the larger buyers. So what we are looking at really in this webinar is how e-invoicing is actually very attractive for SMEs. When we talk about SMEs, we're talking about small to medium-sized enterprises on the supplier side, but also on the buyer side. And it's quite interesting, especially with what's been happening in the past few years, that the SME market really has been coming to the fore when it comes to e-invoicing, and this has been driven by the SME's need for cash. So a lot of large organisations who are suppliers, they're actually being quite well catered for in terms of them being looked after by the bank. They've got a great credit line. And they're generally feeling very kind of financially stable. It's the SME market who maybe won't get that kind of credit line from the bank. They would like to be paid a little bit earlier by their buyers. This is the group of the suppliers, the supply market that this particular webinar is focusing on. So just before I hand over to our first speaker. I'd just like to kind of touch on a few stats as well, and then really just explain a little bit more the context of this webinar. Just want to share some stats with you. You can see the stats here. You can see the kind of the citation of these statistics lower down in the screen, but just some points that are quite interesting to share with you. 90% of businesses report that they cannot provide timely budget and cash flow planning due to lack of visibility within their supply chain. So this means that there's real constraint and there's not a huge ability to be able to plan, and that's very constraining for an organisation. And another point that I'd just like to share with you is that nearly half of SMEs are affected by late payments, with 15% struggling to continue trading. I mean, I remember a statistic going back a few years now. I mean, this is back in 2009. There was a statistic that 67% of businesses that went into administration were actually profitable. 67%, I'll say that again, 67% of businesses that went into administration were actually profitable. And the reason why they actually ended up in such a negative situation was because it's just that their customers weren't paying on time. So just want to share one more stat with you. 64% of SMEs plan to invest more in their business, with 36% saying funding has actually come from bank overdrafts and 27% from credit cards. So what these stats are really kind of calling out is that the SME market really needs to find a way to manage their cash flow more elegantly, and there are technologies now on receiving invoices and paying invoices that can allow them to explore that. So this is what we'll be looking at here. Now, just before I introduce the first speaker, Ian Painter, BankTech has been looking at this, on these particular questions, really for the last while, and came to Shared Services Link a number of months ago to work collaboratively on a study. So together we worked on really looking into this market and understanding the situation as far as cash flow was concerned within the SME market. And Ian and Rob are going to be really looking at some of the key findings from that study. So now I'd like to introduce our first presenter, please, Ian Painter from BankTech. Over to you, please, Ian.
Thank you, Susie, and good afternoon, everybody. Now, before I do take you through the survey results, I should first of all explain where we got responses from. So as Susie said, we worked together with Shared Services Link, and we received over 100 responses from organisations all across Europe. And these were from both the user community and from the providers of financial services as well. So for our user community, we targeted the small and medium-sized businesses, or the SMEs. And these we defined as any organisation with either a turnover of less than $50 million or with 250 full-time staff or less. And for the responses from our vendor community, we targeted both accounting services providers and also the retail banks. So let's take a look at the survey results, and first of all we'll see it from the perspective of the SMEs. So Susie pointed out SMEs, well, in particular, are being challenged to manage their cash flow and really to finance their businesses successfully. So we asked the SME community, to what extent are current credit conditions affecting your business? Now, our study revealed that 45% of SMEs do need to borrow, and these are the businesses, or the figures shown in blue. And the majority of these organisations stated that they are either marginally or seriously affected by current credit conditions. So this is largely what we did expect to see, you know, that many SMEs are now looking at additional ways to finance their businesses. But interestingly, we also see that a similar amount of SMEs, or 44%, those businesses shown in green, that they don't actually need to borrow and are not being affected by current credit conditions. And in fact, half of these we can see are actually reporting that they are cash rich. So overall, we see quite a polarized picture for the SME community as a whole across Europe. So we then asked the SMEs a few more questions to find out more about the cash flow position of these businesses. Now, a good way of understanding the cash flow of any business is by comparing its days sales outstanding, or DSO, with its days paid outstanding, or DPO. And well, apologies if you all already know these terms, but for those who don't, I do need to explain them. So the DSO is the average number of days an organisation has to wait for payment from a customer after issuing an invoice. And the DPO is the opposite in terms of it's the average number of days it takes that same organisation to pay a supplier after it has received an invoice. So ideally, the DPO should be higher than the DSO in order to achieve a positive cash flow. So we asked the SMEs what their average DSO and DPO was, and these are the results. Okay, so this graph is a little more complicated, but what we have is we basically have a timeline showing the average number of days it takes for each of our SMEs to pay their suppliers, which is the DPO shown in grey, and the average number of days it takes for each of our SMEs to receive payment from their customers, which is the DSO shown in red. Now what we want to see is the red band above the grey band earlier on in the timeline, which would show money coming into the SMEs faster than it's leaving them. But what we're actually seeing is the reverse. So during the first 30 days of an invoice, double the number of SMEs are actually paying their suppliers than they're able to receive payment from their customers. So that means more cash is leaving these businesses earlier on in the invoicing process, which has a negative effect on cash flow. And at the end of this timeline, so from day 61 onwards, we see that the red DSO band is now higher than the grey DPO band, which means that there is now more money coming into these businesses. But this money is coming in much later on in the process, which again actually is not what we really want to see. So for our SMEs, on average, their DPO is actually less than their DSO. And in fact, from the survey figures, it took on average 48.2 days for them to collect their payments compared to 41.2 days to pay their suppliers. Or in other words, they're under pressure from their suppliers to pay on time, but are not getting paid themselves until much later on. So overall, we can conclude SMEs clearly do have a cash flow issue. Okay, so now I'm going to hand you back to Susie, who's going to conduct the first delegate poll. Susie.
That's great. Many thanks indeed, Ian. So coming up on your screen now, you can see our first poll question. So what technologies are you relying on to send and receive invoices today? So please tick all that apply. Is it mainly manual paper invoice process? Is it e-invoicing that you're using to receive and to send invoices? Is it through emailed PDF? Is it largely through OCR and scanning? Or are you using EDI and maybe supplier portals as well to send invoices and also receive invoices? So we do like to get these percentages up nice and high. I'm afraid to say only 44% of you have responded. So if you haven't already responded, please do so. And for the benefit of those that have joined today, and it's their first Shared Services Link webinar, we do of course share the benchmarking data live directly after the poll. So it's good benchmarking information for you. So what technologies are you relying on to send and receive invoices today? Please do let us know, and closing the poll in 3, 2, 1. Let's have a look at the results. 63% of you responded, so thank you. Let's see if we can get it up to 70%, please, for the next and final poll. Okay, let's have a look at the results. So we've got two kind of standout winners, I would say, coming in at 65%. Manual processing still today, appearing to be the most popular or most widely used, I think is probably a bit more accurate. Also emailed PDF invoices, and again still quite a heavy component, heavy manual component to that particular process for most organisations. Quite encouragingly, we're at 35% for electronic invoicing, 41% of you are using OCR and scanning, and 35% of you are using a bit of a blend of EDI for the larger suppliers and supplier portals for the smaller suppliers. Interesting results. Back to you, please, Ian.
Thank you, Susie. Well, as part of our research, we actually also asked the SMEs that same question. So what technologies are they relying on to send and receive their invoices? And actually the results that we've got here, if we take into consideration that our e-invoicing category that we had in our survey actually also includes PDF and email responses, are actually fairly similar to today's poll from the audience. So on the plus side, an encouraging number of businesses are actually using some form of electronic invoicing, and that's even if it's only sending invoices by email. But however, the downside is that we can see the vast majority of SMEs are still manually processing paper invoices. So we then did a little bit of analysis on these two sets of results to try and see how are these invoicing methods actually affecting DSO and DPO rates for our SMEs. So, is there any correlation between the different invoicing methods, between e-invoicing and manual or paper invoicing, and the DSO and DPO rates of the SMEs? So for DSO, or the time it takes to receive payments, we can clearly see that those SMEs using e-invoicing to support their financial transactions are being paid much more quickly than those using manual or paper invoicing. And actually for DPO figures we see a similar result as well. So the research is showing us that those SMEs that use manual or paper invoicing are taking longer to both pay their suppliers and to receive payment from their customers. So is this offering any opportunities for SMEs to adopt e-invoicing in order to improve their cash flow? Well, e-invoicing offers many benefits, often quoted, such as improving payment visibility and reducing administration costs. And as we can see from our research, it also looks as though it's speeding up the accounts process. So it achieves a faster DSO rate, which means businesses can get paid quicker, directly improving their cash flow, and it also provides better control over the DPO rate. Now, if you remember, the first slide of the survey that I showed had a section of our SMEs that were cash rich. And for these businesses, e-invoicing can make use of the improvements in DPO to further benefit from dynamic discounting. So with a more streamlined electronic process, these companies can now also offer early payment discounts to their suppliers to further improve their cash flow. So basically, from our results, we can see that the more a business utilizes e-invoicing, the better the potential is to improve their cash flow. Now, this slide that we're seeing here, we're now starting to ask some slightly different questions from our respondents. So services such as supply chain financing and dynamic discounting can not only help to improve cash flow, and that's whether you're a small or large organization, but they also offer a relatively inexpensive financing option, especially if you're comparing to the type of methods that Susie mentioned at the beginning, such as overdraft facilities or credit cards. So you would expect that when credit conditions are difficult, you would, well, expect to see organizations taking up the opportunity offered by these services. But is this trend actually trickling through to the SME market? So on this slide, we asked our SMEs, to what extent are you taking advantage of supply chain financing or dynamic discounting? Now, the definition that we've used for our research for supply chain financing is basically invoice factoring, which is when a business sells its invoices to a bank as soon as they are approved by the customer. And our definition for dynamic discounting that we used is the offering of early payment discounts, which is done directly between the buyer and supplier made on approved invoices. So what we actually found was that 74% of SMEs said that they do not use either supply chain financing or dynamic discounting. Now this was a little bit of a surprise, and especially when in other parts of the research we actually saw such strong benefits from these services. And in fact, our research showed that 90% of all SMEs who are using these services do not need to borrow and are actually not affected by current credit conditions. And our survey also showed that every one of those SMEs that are using supply chain financing or dynamic discounting are actually also using e-invoicing. So there is a direct correlation between the ability to access and use these services and adopting e-invoicing. Okay, so I'm now going to hand you back over to Susie. She's going to do the second delegate poll. Susie?
Thank you very much, Ian. So coming up on your screen now, please do let us know if you use dynamic discounting or supply chain financing technologies today. You'll probably want to tick more than one, so please do. We use supply chain financing with our customers. We use supply chain financing with our suppliers. We use dynamic discounting with our customers. We use dynamic discounting with our suppliers. We do not use either technology today. You should be able to tick multiple boxes here. And we've got 48% of you responding. So if you haven't already responded, please do so. And I'll be closing the poll shortly. Still at 48% of you responding. So if you could tell us a little bit about your situation as far as your use of supply chain financing and dynamic discounting. And I'll be closing the poll in 3, 2, 1. Let's have a look at the results coming up on the screen now. So What we've got here is, and what this really tells us is that 44% of you, so just really under half of the audience on the line today, are not actually embracing either technology with suppliers or customers. So what this, and Ian will no doubt echo this point, is what this illustrates is that there really is quite a significant opportunity for you here. So what else have we got here? We've got 38% of you, use supply chain financing with your suppliers, and a quarter of you use dynamic discounting with customers and also dynamic discounting with suppliers. And the smallest group represented here is 13% of you saying that you use supply chain financing with your customers. Interesting results. Back to you, please, Ian.
Thank you, Susie. Actually, these results are a little better than the results that we saw from our SMEs from our research, but it still indicates that I think the majority of businesses are not really using these services as commonly as perhaps they could. Okay, so we then asked the SMEs whether they were interested in adopting these types of services. So first we asked whether they are interested in adopting e-invoicing. We can see here that a very high percentage, 74%, stated that they are possibly or very interested in adopting e-invoicing. Okay, and the results were similar when we asked them whether they were interested in adopting supply chain financing or dynamic discounting services, which is the next slide. So these results are encouraging. We can see that the majority of SMEs actually do understand the benefits that both e-invoicing and financing services can bring to their businesses. So to sum up the picture from the user perspective, on the one hand we can see that those SMEs that are using e-invoicing have improved their cash flow, and they also have a greater ability to access and benefit from additional financing services. And for those SMEs that are not using e-invoicing, they are showing some real interest in the technology. So why haven't they adopted these services yet? So to get an overall look at the market, we also need to see what the vendors are doing. Now, we already know that the traditionally invoicing technology suppliers have to date largely only really targeted their solutions for use with larger corporations rather than for the SME market. But we also need to know what's actually happened with the traditional providers, the accounting and financial services suppliers. So we asked both accounting services providers and the retail banks, are you planning to offer supply chain financing, dynamic discounting and e-invoicing to your business customers? And this is what we found. So we've got, well, 32% of accounting services providers and 34% of retail banks are looking to invest in these technologies. And that's in order for them to offer their business customers these services as a high priority. We also have another 28% and 25% respectively that are looking to provide these services as a lower priority. And we also have many more that are considering this investment. So now we have an overall picture of the market. Although there are clear benefits for SMEs to adopt services such as e-invoicing and dynamic discounting, currently, however, the vendors in this marketplace have not actually yet made them available to the SME market. And although many service providers are highlighting these services as a high priority. Okay, so that basically concludes the summary of the research that we undertook together with Shared Services Link. So just before I go through the final slide, which is to cover the 5 key points to achieving cash flow control, I'd like to now hand you over to Rob Liddell, BankTech's Head of Solutions, who's going to provide some guidance on how to select the right e-invoicing service, and hopefully we'll be able to show you a brief demonstration of BankPay, which is BankTech's intelligent cloud invoicing service. Okay, Rob?
Yeah, thanks very much, Ian. let's take you through some of the things that you should be asking in terms of your e-invoicing provider. It is very important that you do get the right provider that provides a flexible solution. The first thing is you really need to go for a cloud-based solution these days, because it gives you far more flexibility in terms of scalability and also coverage worldwide. And it really needs to be free to join for your suppliers. There's nothing more negative than a supplier having to pay, possibly some providers charging over £1 for every invoice that you put through it. You also need to ask whether it's got an open network approach to connecting trading partners. So it's all very well supplying invoices to a specific large buyer, but it would be great to be able to use it for our own trading partners, our own customers, and other buyers that we want to send invoices to. So I think an open network approach is very important these days. Also, I think it really needs to provide a little bit more than just sending e-invoicing these days. People are looking for much better collaboration in the supply chain between buyers and suppliers. So it needs to have some tools there in terms of sharing notes on invoicing, messaging, so that everybody can also look at the same invoicing transactions. When we are setting up our trading network, our open network, do you really need IT skills to do this? And ideally, these days, IT skills are very expensive, difficult to come by for smaller companies, so much better if you can do that yourself through a point-and-click user interface. We also need flexible ways of getting invoices into the system. So we're dealing with vast varieties in terms of companies, very small companies, sole traders, to much larger companies. So in order to do that, we really need to provide a variety of different ways of getting invoices into your system, from web forms through to more sophisticated connections to your ERP system. So all in all, we really want to provide a service that can actually function well, but without having to change the way you work on a day-to-day basis. So you don't really want to make changes to your accounting or ERP system. You want to be able to bolt this on and it to work first time. And then lastly, you may need some assistance to get your own suppliers on board and sending you e-invoices through your network. And that can be a variety of different methods. It could be just advice in terms of documentation so that you do it yourself. From that to outsourcing the whole exercise to your provider themselves. So yes, quite a few things to look at. Right, so what we'll be doing now is looking at the BankPay cloud invoicing e-invoicing system, and I'll do a short demonstration. Just a word of warning before we actually started the webinar. I'm actually remote from the office at the moment. We're having some problems with my screen, so hopefully you'll be able to see something of it. Happy to do another demonstration at any other stage if you can't see a lot of it. So let's go ahead with the demonstration. It's a fairly short demonstration. So next screen. So we will be looking at a little bit at the open network approach that BankPay has, and the easy way that you can put invoices into the system. And then we'll be looking at the collaboration in terms of sending offers out to early payment and the acceptance of those early payment offers. So we've invented two organizations for the purposes of this demonstration, which we will see on this next slide. So we have a company called Eco Cleaning Services, which has a relationship with a hotel called Staywell Hotels. And what we'll be seeing in the demonstration is we'll send an invoice to Staywell Hotels from Eco Cleaning Services. Eco Cleaning Services, the AP staff, will then approve that invoice. And then we will automatically trigger an early payment offer, which goes back to Eco Cleaning Services, and they can either accept or reject that offer, and also select the payment date that they prefer. And then finally, the last stage of the demonstration, we'll be looking at the treasury side of it, how you reserve a set of funds in order to do the early payment discounting, and also how we set up the discount offers. Okay, so with a bit of luck, we'll now share my screen, and we'll go straight in. Hopefully we can see that. So this is our home screen of BankPay. You can register at any time by hitting the register button, mybankpay.com. What I'll do now is log in as Eco Cleaning Services, and I've got a login here. And what we'll see as we log in is the home page with the dashboard. And this will have various bits of information on here. It'll show some activity feeds, which is kind of call to action on things that we need to do. So on the activity feed, you'll see the top one there. We've had a request to connect to another company, another supplier or another customer, which we can accept or decline. We can also see other invoices which we've been recently working on, and we noticed that there's a couple of offers, early payment offers, being made on the invoices in the second and third lines. We also have a summary of the status of the invoices that we're dealing with on the right-hand side of the screen. And if I scroll down, because BankPay is actually dealing with both sales invoices and purchase invoices, we'll see a total summary of the paid and unpaid invoices for our particular company. And then lastly, at the bottom, we have various sets of dashboard widgets which actually use the very valuable information in invoices in a more productive manner and to provide you with some business intelligence. So we have the top 10 customers on the left-hand side, and then the time of waiting for payment of our invoices. So that's the overall home screen. So what we'll do, we haven't got a lot of time on this webinar. I'll just show you briefly what we call the connections, which is the heart of the BankPay system. It works very much similar to a social networking approach. So My Connections really is a list of the companies I'm doing business with on a regular day-to-day basis, my trading partners. And we'll notice that some of these in the discount have a discount scheme on the right-hand side, and this indicates that we have a discount scheme in place with that particular company with Advanced Engineering. So how do we set up these connections? Well, we have a BankPay directory of all the people that are registered worldwide on BankPay, and we can send a request to connect at any time. And if that request connection is accepted by the other end, that organization will now appear in My Connections. So if I come to incoming approvals here, we will see some connection requests that have been sent by other companies, which we can either approve or reject. So that's a short précis of how the connections work. So what we'll do now is we'll go to the invoicing screen, and the invoicing screen has some fairly sophisticated search criteria, so you can search on any of the columns. These columns are also customizable in terms of the information that you display. So the important information here is the status of the invoice, and we actually only create the early payment offer as soon as the invoice is approved, as I mentioned before. The status of the offers can be seen over here on the right-hand side. So offer accepted, offer available, or offer expired. So what we'll do now is we'll create an invoice, and we've got a number of different ways of creating invoices in BankPay, but we'll use a very simple one for the purposes of this demonstration. So this is the invoicing screen. So the first thing we do is we select where we're sending it to. So we're going to send it to a member of our trading partner network, which is the Staywell Hotels. It automatically increments the invoice number that we've actually put there. We have some buyer-side validation here in terms of information required by the hotel, and it's saying that we must provide a hotel ID when we're submitting an invoice to them, which is mandatory. So I'll now scroll down and we can fill in some line items. So we'll buy some floor polish, and we'll buy 1,000 of these, and that'll be bottles, and the unit price will be £1.23, and the tax rate is a standard rate, and we have our first line item. It's automatically calculated the VAT required based on what I've selected, and then I can select and send this invoice to Staywell Hotels. So what it's actually doing now is it's sending the invoice off. It's also enriching that invoice with some of the information that was actually captured during the registration of Eco Cleaning Services. So it will be placing in the bank account details, the payment details, so that it creates something which is man-readable. So if I view the full screen, this is the invoice that's actually created. So although we keyed in a very little bit of information, it's actually created quite a nice invoice, PDF invoice, which you can export and is also stored in our repository. So what I'll do now is log out of Eco Cleaning Services, and I'll log in as the hotel, and I'll go through the login here, and we'll log in, and you can see the logo on the left-hand side now is Staywell Hotels. And so we'll now have a look at the status. So it's saying we have a new invoice from Eco Cleaning Services. So we'll go to the invoicing screen here, select that invoice. And you notice we have two tabs here, sent and received. As I mentioned before, we can have sales and purchase invoices in the system. So this is the invoice that we actually created from Eco Cleaning Services, and this is the floor polish that we actually purchased. So what we'll do now is we'll approve that invoice. Obviously we have much more sophisticated ways of approving, but this is something that we use for sole traders. We have a sort of cut down approval system. So this will now approve the invoice, and we'll see the status of it changing from awaiting approval to approval made. And this will automatically trigger the early payment offer. So we've now approved that. Now if I refresh this screen, we hopefully will see that the status is now approved. And what actually happens is, you can see on the left-hand side, an offer is now available. So again, many apologies, I'll just log out of here and log in again as Eco Cleaning Services, the supplier, and we'll see that we have an early payment offer, which was posted today, so we can now view that offer. And so we'll select that transaction, and I'm a bit limited on screen size here, but if I scroll down, you'll see we now have a calendar at the bottom here, and this will actually express the offers that have been made to Eco Cleaning Services. So we've actually made two offers, one for an early payment of 2% over the first 10 days, and if we want payment after that first 10 days, between 10 and 20 is a 1% discount, and the amount that the supplier will actually have to pay is actually shown here on each date. So if I select one of these, I'll say I want to be paid on the 17th, so I've got a reduced amount of 2%, so which I'm going to receive from the client. I can now accept that offer, and what we'll actually see in a minute is a full audit trail is actually available at all times. So if we go into the offer summary, you can see the system is automatically recording all the actions in terms of the offer, when it was made and who accepted it, which is obviously very important for audit purposes. So the offer has been accepted. So now if I refresh this screen, we should have offer accepted, as we can see on the left-hand side. Now, in addition to this, you can't actually see it on this demonstration, but there are email alerts that go out at all times so you don't actually necessarily have to log into BankPay to see that you've had an early payment offer. And also there's an email alert that goes back to the buyer to say Eco Cleaning Services has actually accepted that offer. So so those are all the stages, the first three stages. So what we'll do now is log in as Treasury, and we'll now have a look at how you actually set these offers, just to finish off the demonstration. So we're back in as Staywell Hotels, and we have what we call a discounts menu option here, and the discounts menu option is split into two parts. So I'm now a treasurer of Staywell Hotels, or in the finance department, and I can reserve a total fund value of a certain amount, and this will actually automatically count down based on the offers that have been made and accepted. And as the normal payment date comes up, then that money is actually refunded to the total fund value. And we can actually set up alerts when this value goes down beyond a certain amount. So let's have a look at the discount schemes. As I showed you before on the network connections, we can allocate these offers to specific suppliers if you want to through our network, or to all our suppliers. We can also set up the offers, and we've got two offers here. The first one is 2% discount if paid within the first 10 days. So we've got the days set up here, and then we've got the minimum and the maximum value of the invoice that applies to. So obviously for low value invoices, you don't particularly want to make early payment discounts to something like a £50 invoice. So we tend to set up a minimum value of the invoice value, and conversely on the larger value, if you had a £2 million invoice come in, you wouldn't not necessarily want to be an automated process. You may want to get a human being involved as a part of that early payment discounting. So that really finishes off my demonstration. It's obviously a very short précis of what's available in BankPay. If you want a much more detailed demonstration, we're happy to do that at any stage. So that concludes my demo.
Okay, thank you,
Thank you
Rob.
very much, Rob. And I think now over to
Okay, so thank you for that demonstration, Rob. We're basically at the end of the web conference today, but to conclude, I want to go through, I promised you I'd go through the 5 steps to achieving cash flow control. And these are based on the findings of the report. So the first point is that we saw that SMEs need to find alternative ways to obtain business financing in order for them to invest and to compete. And this is, of course, especially true, especially where some of the more common financing options that are being used today can be, let's put it this way, very expensive. Now, secondly, we also saw that adopting e-invoicing technologies does have a significant and positive effect on an organization's cash flow. And this is by reducing the average DSO figures to give better control, and also to give better control over the DPO figures as well. Thirdly, with these improvements in place within the invoicing process, we also found that not only can SMEs speed up payments coming into their business, but they can also further improve their cash flow from additional financing services such as early payment discounting, for example. And we also saw that by looking at the vendor community, that although many accounting services providers and the retail banks are not currently accessing e-invoicing or financing technologies, they are still looking to invest in them in order to provide additional services for their business customers. And with the advent of cloud technology, vendors are now able to make e-invoicing and dynamic discounting services cheaper and more accessible to the SME market. I think this is something that goes generally across the market, that cloud services are allowing SMEs to gain access to all types of services that have never been available to them before and only been accessible by larger corporations. So this also allows SMEs to compete on a much more level playing field. And the fifth and final point that we can take from the research is that the vast majority of SMEs are still handling mostly paper invoices. So in order to gain the maximum benefits from using e-invoicing, not only must these services be low cost and easy to access, also easy to use, but they must also be able to handle all types of invoices, whether they're electronic or PDF, email or paper. And that also means being able to effectively manage both the collections and the approval process for electronic and paper invoices. Without that capability of handling paper, the results show that SMEs will not be able to maximize the improvements that they can make to their cash flow. So that completes today's webinar. I hope you found it of interest. And so for the final time, I will hand you back over to Susie.
Many thanks indeed to Rob and to Ian. We've got many, many questions, so let's kick off. There's one question which is, what defines small, medium-sized enterprises? And now I know that you defined it at the top of the webinar. Please, if you could just define it one more time for me, Ian.
Okay, so yes, from our research, and there are different definitions depending on what sources you take, but for the purposes of our survey, the respondents were either had a revenue of under $50 million per year, or their workforce they had either under 250 employees. So that was our definition.
Okay, thank you. A question about accounting services organisations, and I'll put this to, well, either of you actually, but maybe I'll direct it at Rob. So Rob, how does an accounting services organisation offer supply chain financing or dynamic discounting? This particular viewer thought that only financial institutions could logically provide such services. What's your response to that, please, Rob?
Yeah, certainly. I mean, the issue with other financial institutions is that you obviously incur quite a lot of costs, and also to engage those financial institutions, there's quite a lot of due diligence on the company. So it really means at the moment only very large companies can get involved with that. The beauty with early payment discounting and dynamic discounting is that you don't necessarily need financial institutions to actually get involved. So generally the way these accounting service providers is really engage with their clients as customers to see whether they're interested in this kind of service being provided, and whether they obviously have the appropriate cash to actually finance it themselves.
Okay, good. So there is a choice. They can use their own cash or use a third party's cash if needed. They do have a choice in that. Is that right, Rob?
That's correct, yeah.
Okay, so this might go towards answering a question which came a little bit later in the queue, but I'll jump to it now. The total fund value field that you were highlighting at the end of that particular, your demo,
yes.
Does the buyer actually fund this by placing funds into a specific account, or is this for tracking purposes only?
It's for tracking purposes only. It really is immaterial which account he's got it in. Yeah.
Okay. Jumping back to some of the questions at the top of the line, if you will. This is a question about the survey itself, please, Ian. What was the geography for the survey respondents? Were they mainly EMEA or US?
The geography was mainly EMEA. I mean, we carried out, say, together with shared services, that the vast majority of the respondents were from EMEA. We did have one or two respondents from North America, but yes, I think just in purposes of being able to be quite accurate in terms of the geography, yeah, I mean 90% of the respondents were from Europe, and it was a good split between some of the main geographic areas, so UK, France, Germany, Scandinavia as well.
Okay, and the actual solution itself, which countries is this kind of functionally available in?
I'll take that one. At the moment, we've got we can actually function it in a basic level in any country, really. We've got another, but in terms of VAT compliance and so on, we've got it for France, Germany, Sweden, UK, and also the US. Not that they have to be VAT compliant, but they've got other specific requirements. And since it's actually designed to be multi-currency, multi-country from an accounting point of view, we've actually designed it from scratch to do that. It's relatively easy for us to actually roll out to additional countries. I guess the only difficult bit is actually getting the language translation done for the software. So it doesn't take very long for us to roll out additional countries, but those are the ones that we're generally supporting at the moment. We have got some other additional countries in Abu Dhabi and places like that, which are just using it in a sort of a generic fashion without tax compliance.
Okay, good. How are late payments managed with the bank pay solution? This might be one for you, Rob. Are there any alarms that are triggered which it kind of are sent to either the sender or receiver when it comes to late payments?
Yes, we've got some basic functions in there at the moment. Obviously, all the transactions you probably noticed on the screen when we were in there, as soon as it's exceeded its payment date, is actually turned red on the screen. And we also have lots of user-definable alerts, which at a user level you can set up. I don't think we've specifically got one at the moment for late payment, but it's certainly relatively easy for us to put in another type of alert. And those are all user controlled, and they have to be because of the varying size of organisation that BankPay is actually targeted at.
Thank you, Rob. A question about integration with SAP, and I suppose, whilst we're talking about it, let's talk about other ERPs as well. So to what degree do you have interfaces which are appropriate for SAP for both invoices on sales and the purchase side? And there's also a second question to that. Sorry if I'll just jump in and put a double question in there. Do you have out-of-the-box interfaces with some banks for the supply chain finance process?
That's certainly an area that we're working quite heavily on at the moment. We have very good, established and easy-to-use user interfaces into BankPay, which are generally web service-based. So it is relatively easy for us to integrate to almost any ERP system. But in terms of established sort of plugins or connectors to other ERP systems, we're working on SAP at the moment and also Oracle. But generally we're finding it's a lot easier in today's world, IT world, to actually start interfacing to other people's systems. And we also obviously in BankPay have a huge amount of experience because we are an SI, a system integrator ourselves, so we have quite a lot of resources to do that. So that's the current situation.
Okay. Yeah. Do you need to be a BankTech customer to be able to use BankPay? How does it work?
You can actually register on our website actually. to actually use BankPay. So it actually is free to use. If it's, I think it's beyond 50 transactions a month you're allowed. Above that, we have a subscription service which you actually have to pay for. But generally, it's free of charge for most suppliers, low-volume suppliers, and you can register yourself.
Okay, and if you're looking to roll this out as a program for pretty much all of your suppliers, how long a time scale are you roughly looking at?
We generally use, like most people, a segmentation approach. So we obviously put them into segments in terms of priority of what you want to do in terms of who the main suppliers you want to hit first. But generally, it takes around about 9 months, I suppose. But obviously, you try and achieve a better rate than that. You can on the higher volume. But some of the laggards that people are a bit more reluctant, that can take a little bit longer.
Okay, good. For those of the people on the webinar today who would like to find out more or potentially sign up, what's the best next step for them, Ian? Is it to contact you directly?
Yes, they can certainly do that. As Rob mentioned, we have a website which is mybankpay.com. You can send us any details or your inquiry via that site. As Rob mentioned, you can register your company, actually start using the application straight away. Or yes, absolutely. I mean, you can send an email to us, and I'm sure also, Susie, if anybody contacts yourself or Shared Services Link, very happy to manage any inquiries via yourself as well.
That's great. Thank you very much. Right, ladies and gentlemen, that was a really interesting webinar for us today. So thank you to Rob and to Ian for going into detail there and sharing the study results with us. We will actually be sharing the infographic study with you all, so please do look out for that. You can see our upcoming webinar program on your screen now, and also our upcoming conference that we've got in November. So please make sure that you do attend as many of our upcoming events as possible. Ladies and gentlemen, thank you very much for your time and attention today, and we look forward to welcoming you next time. Thank you and goodbye.